In the beginning, food tech was the perfect investment philosophy because you're saving the planet, you're feeding the planet, and you're making money out of it, right? And I think this is the cycle hasn't been proven. We haven't seen successful exits, right?
How patient do they need to be in investing in the food tech industry? What would it be your recommendation?
So I think from that point of view, that I have a strong conviction we will see food tech progress. But what we first going to see now is a consolidation, and that's happened before in the clean tech space.
Do you see that happening in the traditional food environment where, these traditional food producers eventually will embrace more technology to enter better into the food tech, or they don't have a chance?
If you're a startup right now, you need to figure out, how can I defend myself from all the other guys who just created the brand? So either you add a certain amount of technology into it, or you add functionality, right? I think this is the interesting part.
Welcome to the Tech Foresight podcast, where we are diving deep into the world of technology and its impact on all industries. Today, we're zooming into the fascinating world of the food tech and space where science and sustainability, consumer demand are reshaping what we eat and how we produce it. I am Diana Daniels. I am an entrepreneur based out of Barcelona, working in telecommunications and digital inclusion. I am your host in the Tech Foresight podcast. And today I have the pleasure of hosting Alex Pestalozzi. I'm a strategic visionary and versatile chief financial officer with wealth of experience in all what it is: investing banking, family offices, operating businesses with a strong commitment and creating that impact on that food system that has led them to be very involved in biotech companies and global leaders in the alternative protein solutions industry. So welcome, Alex. Thank you for being with us.
Thank you, Diana. Thank you.
Well, let's get ready for this conversation filled with all the insights on how innovation meets the plate and what it means for our future. So, Alex, food tech startups are facing various challenges in gaining traction, from finding this product market fit where they're navigating either regulatory landscapes or even finding funding. I saw actually one thing that you posted on LinkedIn the other day, and I was reading more about it, and I realized that the venture capital funding food tech industry has dropped more than half last year. And what it reflects is not just the broader conditions on what is happening, but the struggles that the tech funders, especially in the food tech segment, are experiencing. What is happening? Why are they suffering this struggle?
Yeah, that's absolutely fair question. I think it's generally it's cycles, right? And the question is, where are we in a cycle? And there's also very strong correlation between VC cycles and cheap money versus great ideas, and how they get accelerated and how they turn profitable. And I think profitability is most probably the key word in all of this. I mean, if you remember 2014, that was the first time I got in touch with food tech. That's when Impossible Food came out to raise their Series C. And it was the new big thing on the market. Everybody was talking about alternative proteins, how you can recreate the taste of a burger, and everybody was jumping on that bandwagon. And that led to the IPO of Beyond and crazy valuation rounds of Impossible. But fast forward to today, Beyond is down about 97% from IPO. And this just kind of like shows that, is there not enough fuel or acceleration in that space? And I think what we have to see is the alternative protein space has been hammered quite a bit. And the key question is, who is your consumer? And I know we're going to jump into consumer behavior, but I think especially to kind of get the understanding around alternative protein, it's important to understand who's going to eat it, right? Who's going to eat the plant-based burger? And it always comes down to three things. It comes down to taste, price, and then the other one is scalability. And I think the fourth one most probably is nutritional content. And that was the beginning. Everybody wants to try it out, and they try it one time. But if it's more expensive, less tasty, and less healthy for you, why should you repeat purchasing it? And I think this is really what happened to Impossible and Beyond, that the product offering was great as a, let me make a picture and put myself on Instagram trying the new Impossible burger. but will I really incorporate it once a week into my diet? And I think that hasn't happened. And that's most probably the food tech 1.0 on the plant-based side that hasn't really hit home. The other thing is as well, crazy valuation for, I mean, I don't want to be negative on Beyond or Impossible, but they're more food ingredients company. You're reproducing or remimicking a flavor of beef with plant ingredients. Should that have a tech multiple? Maybe not.
It's interesting because I actually checked, those type of examples you were telling us. Oatly, they picked over the $28 per stock. And then in, like September 2024, they closed less than $1. And
Yes.
Beyond Meat was like 183. And they closed also at the end of September now in 6.25. So, and this is like basically post-IPO. So what you're saying is that there's two frenzies, right? The frenzy of going IPO, going crazy. Yes, I have like this great company. And then the frenzy of what I am offering into the consumer market that is not really meeting the needs of the consumer. And that's the real valuation.
Yeah, and the other thing is as well, when you do an IPO, it's like you're public marketly traded, right? The hype that is priced into private held companies is not there anymore in the IPO. The IPO is very much, you have to do your quarterly results. People will look at it. People look at your marketing spend. You have to estimate where you're going with your earnings. If you don't hit it, it just goes down. And I think it was crazy. I mean, Oatly IPO'd at around 10 billion, if I remember, with around 200 million of sales, right? That's a 50x sales multiple. Now, that's great for a tech company, for a chip company, something around that. But for a food company, it was just a crazy valuation. And people made money, don't get me wrong. People made money on it because it was the early stage investor who could sell out after 6 to 12 months holding period made money on it. But the new people coming in and buying into the craze and are like, oh my God, they're going to replace milk overall. They didn't make money. And I think there is a key difference between plant-based milk and plant-based meat. I think plant-based meat has a much harder standing versus plant-based dairy. Dairy per se is easily replaceable. We had oat milk out here in Asia for a long time. You have almond milk for a long time. So I think the adaptability of switching your milk to plant-based milk can also come from a digestive point of view, right? It's like generally people, as older they get, they create some certain kind of lactose intolerance. They still want to consume kind of the benefits out of milk. So if you look in the US, it's about 20% of current milk consumption is plant-based. Now on the meat side, I don't even think it's 1%. And I think that's the difference. And I think this is really what makes it very difficult because I have a choice as a flexitarian. I can eat a burger, or my doctor says, don't eat the burger because of the cholesterol. Well, then maybe I eat a very healthy vegan curry that is actually healthy for me. Now, why would I pick the plant-based burger in the middle, which used to have a huge ingredients list, and now at least with Food Tech 2.0, they're changing and creating some functionality. But if I care about health, I would not pick a plant-based burger. I stop my burger and I take vegetables, right? And so this is it. I don't think it really hit the nerve of the time in regards to healthy living, especially with the acceleration of COVID as well.
But what do you think that is happening? I mean, the food tech companies start showing, as you said, many of these consumer expectations on price, nutrition, and taste, and which is super important in order to gain, the adoption of the customer. Why do you think it's so difficult for the food tech startups to compete with traditional food products on this front? And how, if a food tech startup founder is watching you right now, what advice would you give him to better address this puzzle?
I think what we have to see here is as well, we capture food tech and we believe that there is technology within the plant-based space. And I think they wanted to make us for a long time, they wanted to say, look, there's technology. That's why we write price evaluation, why most of it was a brand play, right? And if you have a brand play, you can build your brand, but your entries of barrier are very relatively low because you have no technology to defend themselves. So the problem there is you got the big guys like Nestle and Danone. They come in, they can recreate the product that you have, and then just use the distribution power, which makes it very difficult for you to survive on the long run because you have no defensibility. There is no USP, right? And so I think from that point of view, if you're a startup right now, you need to figure out, how can I defend myself from all the other guys who just created the brand? So either you add a certain amount of technology into it, or you add functionality, right? I think this is the interesting part, where you can take technology to recreate dairy proteins, and we can touch upon cell-based and precision fermentation in a second, but then you can recreate it and enhance your product. So if you have a plant-based product, that actually is enhanced with certain attributes or functionality. So it's more than just replacing a burger, but you're adding whatever. Let's say you add calcium. Let's say you add lactoferrin, what we did in my previous company. You create functionality. So you're improving the original product by being healthier for you. And I think then you have an edge. But just by replacing the existing burger with a less nutritional, more expensive, less tasty product, I don't think that has a market. It might be a hype, but it's gonna slowly die out, right? And I think that's what we're seeing, and we're seeing now new companies thinking about mycelium mushrooms, thinking about creating functionality, creating certain amount of proteins that you can add into your plant-based milk to enhance it, right? Make it more nutritious, make it healthier for you, and I think then you have a product offering.
You briefly mentioned the precision fermentation products, and while some countries like Singapore and maybe the US are more open to this cell-based and precision fermentation product, others, particularly in Europe, are falling behind.
Yes.
I know that the progress are crazy. So what do you think that the role of government should play in advancing this food tech innovation, and what strategies the startups that are in this ecosystem should implement and navigate those hurdles?
That's a great question. And before we jump into it, maybe just very quickly for the listeners. So you have on the food tech alternative protein, you have the plant-based, what we just covered now. You have the cell-based, where you take a cell. So you take a biopsy from a cow with all the cell lines, you put in a growing medium and the cells multiply. And then you're trying to recreate a whole steak, for example, with all the muscle, fat tissues, and everything around it. And in the middle, you have precision fermentation, where you take a microbe, you change the DNA of a microbe, you feed it sugars, and then you create individual enzymes or proteins, right? So this is what my previous company did on the precision fermentation side. Now, the biggest problem that precision fermentation and cell-based have is they go after commodities. They go after meat. And for example, some of them go after milk. The problem with commodities, they're very, very cheap. So for you to use expensive biotechnology to make a competitive, cheap product, it's going to take you a long time. And this is the current struggle that a lot of these companies are facing who are doing commodities. And I'm using this as an excuse to come to the point of what should government do? I mean, if you think about both the dairy industry and the meat industry have certain amount of subsidies that come from the governments as well, right? The negative effects in regards to factory farming doesn't get included in the price. So what could governments do is they could help subsidize those new technologies or help build the infrastructure, which is one of the key CapEx investments, especially around cell-based. You don't have enough infrastructure. On the precision fermentation, you do have some. You need to convert them. But for them to hit the same price point as 1 liter of milk, for example, it's going to be really difficult without government support. And so this is what they should be doing. They should finance or create subsidies so we have equal footing, right? That's one. The second one, regulation. Regulation is very, very tricky. We have the US. The US is very favorable, where you can go with a self-GRAS if it's an existing product and you're recreating an existing product, then you can start selling it. That might take you 18 months. In Singapore, also very favorable. They have approved cell-based meats already for good meat. We had the first chicken that has been produced with some cell-based components in Singapore. So they've been very favorable on that. Europe, with EFSA, it's very, very difficult. I mean, you might have seen Formo They're based in Germany, and they want to do casein. And so casein is being used for the stretchiness of the cheese. They want to recreate it using precision fermentation. The problem is the approval process for them will take such a long time that they start now pivoting to a plant-based product to start producing, and most probably will decide to find another market to launch it, because EFSA has not been favorable at all. And then you have countries like Italy who outright want to ban any cell-based meat being produced, right? Because you have these local lobbies who are very strong and are afraid. And instead of kind of like, how can we do this together? They're not doing much. And you have some other governments who are trying to do that. You have a lot in the Middle East, right? With NEOM, in the Middle East, they actually started to kind of like say, okay, we're going to build the infrastructure. You're going to bring the companies, and then together we're going to develop that. And I think that's the right move, right?
I agree with you, but do you think that probably this is related to, because I don't know what is going on in Asia, but it looks like there's a declining investment pattern here in Europe in the food tech area. If we go back and see the dollars invested, the data that I found show like 14.7 billion in 2021. And this is 3 years ago. While this year in 2024, it doesn't like that we're going to reach like the $5 billion mark. So yeah. Is it related? What do you think that either investors and startups on food tech companies could work better in make it happen?
Yes, no, it's absolutely fair. But I think if we look, especially the last 3 months or the last 6 months, there has been some companies raising quite a bit of money. So Formo raised nearly 60 million in Europe. You have New Age Roots, they do mycelium. They also raised around 50 millions. You had Helena, they're doing human lactoferrin in the US, also close to 60, I think maybe 40 to 50 million, if I remember correctly. So there is still investors putting money into it, but very often it's the existing investors who are doubling down on it. And in Europe, funny enough, you get a lot of support, like European Investment Bank. You have certain amount of different countries who give subsidies. Holland has also kind of like committed more than 60 million to do more in the cell-based space. Singapore has tried similar. They have this 30 by 30, that by 2030, they want to have 30% of food products actually locally sourced and locally produced. They have gone a little bit more quiet on that initiative, but the goal is still there. But I do feel Europe is doing quite a bit if it comes to investing in governmental support. But the big elephant in the room is still the US. I mean, all the VC money is in the US. If you're a US-based company, you will get most of the investments from the US, right? Because it's a huge market. It's a very healthy market. I mean, until the elections, we'll see. But right now, it's the market where most of the investments are going into. And China is pretty weak right now. And Southeast Asia, the big issue is most probably exits, right? Exits, you don't really have great stock exchanges. You had Hong Kong a little bit. Singapore is difficult to exit. So your key exit scenario is still NASDAQ. Then why don't to take your whole company to the US if the regulatory environment also allows you to sell it, right? If you're a food tech company in Europe or in Asia, and it's very difficult for you to reach a certain market, right? Europe, you cannot, and Asia, Singapore is 4 million people, right? How are you going to generate the sales? So why not shift your company to the US where you have easier regulation, the necessary funding, and 300 million of consumer, right? So I think this is really where Asia needs to do a certain amount of catch-up, which can also be a chance, right? If Indonesia by tomorrow says, we're going to accelerate and we're going to allow the sales of cell-based or precision fermentation produced proteins or meat, that would accelerate it. And suddenly you have a market of 300 million people. But then again, it needs to be at a good pricing point, right? You cannot sell it at $20 per kg.
If you are an investor watching right now the episode of Tech Foresight, and we want to foresight that image of how patient do they need to be in investing in the food tech industry, what would it be your recommendation?
This is a great question, because patience is most probably currently one of the key things. I mean, what you've seen is there was a lot of overpromise, like when we would hit those positive unit economics. Now, in the beginning, food tech was the perfect investment philosophy because you're saving the planet, you're feeding the planet, and you're making money out of it, right? And I think this is the cycle hasn't been proven. We haven't seen successful exits, right? We had Perfect Data nearly raised about 850 million. They were supposed to go IPO. This has been pulled. They've been struggling. And as an investor right now, if you have patient capital that you say, I'm not driven by a VC, I'm a family office, I can hold as long as I want, I think it's a great buying opportunity right now, right? You can get a huge amount of discounts. The valuations that happened in 2021, 2022, they're most probably 60 to 70% down, right? So
Wow.
if you're a patient investor, you can go and buy now certain assets and see how they can accelerate. But I think what I would do is I would definitely look, is the technology really that advanced, and have a third party do the necessary analysis? And then the second one is, what's the possible exit scenario, right? Do they have a strategic partner already early in that could possibly buy them down the line? When will they get to market? What's the profitability going to be? And will they achieve gross margin? And I think the name of the game back in the days was just vision and sales. And yes, we will reach billions of sales, where now is, what's your profitability? And I'm not talking full company, I'm talking gross margin.
But we're thinking about patients. It's like, how long do you believe that these investments can start flourishing? Like they put, you have a family office, you put money in. What is the typical return that you expect?
I mean, it's a crystal ball, right? I think from the companies that are now slowly waking up and are focusing either on high value or on individuals. There's companies that focus only on fat. They use cell-based technologies to do fat. There's companies that don't use precision fermentation. They use fermentation, and they do mycelium mushrooms to replace plant-based food, which is then also kind of like on the healthier side. But I think if you are an investor right now that wants to create a 5 to 10x return, I don't think you can do that within the next 3 to 5 years in food tech as we know it right now. I think right now it's more of, I can get in very, very cheap. These guys have a great cap table. They have deep pockets. They will not let them go down to zero. I can buy in with a great discount, and I'll wait and see. And I think as a family office, generally you have your asset allocation, right? So then you look at your private market allocation, and you say, okay, this is a fraction of my private market allocation, and it's fun, right? It's exciting. It's new technology. I mean, the dairy industry hasn't changed the way it produces milk since 10,000 years. Should we find something? Absolutely. So I think from that point of view, I have a strong conviction we will see food tech progress. But what we first going to see now is a consolidation. And that's happened before in the clean tech space. That's also what I wrote in my article, that in the end, what's happening now, we just see a consolidation. All these guys who overpromised, they're going to go down to zero. And that's great, because then you get the dollars allocated to the companies that actually have technology and can bring this much further. And we will get there. I mean, we will be able to produce our foods in the lab. It's just not going to be tomorrow. And those who promise you tomorrow, they need to show how they will actually achieve it, right?
And bringing then the conversation now into the technology scenario, what technology do you believe are crucial for this food tech industry to be relevant in the next 2 to 3 years? What is it happening?
The technology is there. I mean, both precision fermentation and cell-based technology is there. But maybe we start with cell-based, which has been a few companies out there who want to recreate the burger. There's European companies, there's US companies. They raised substantial amount of money. I sat on the board of one of them as an observer. They raised huge amount of money. So what needs to happen is the following. They're using biotechnology to recreate the commodity, right? Biotechnology generally is being used for pharmaceutical ingredients, and that's at a very, very, very high value. Now, a burger is a very, very low value, right? The other problem that you have is you need to have the biomass. So what you need to have is the growth medium to help the cell's growth. Now, if you're thinking about, and this is not from me, this is from the Good Food Institute, if you want to replace 5% of current meat consumption, you need about 5 billion liters of that growing medium. It doesn't exist right now, right? So this is really the problem. What needs to happen is we need to get unit economics down so that they're in price parity. Nobody's going to pay $20 for a steak, right? Yes, some Wagyu or some Kobe beef, but the general public will not. And you're trying to go after a huge TAM. So that needs to come down. And if there's a few companies working on that, but it's not going to happen from today to tomorrow. And the other thing is CapEx investment. These cell-based companies, they need to build the factories with the necessary tanks where you can grow it. And it doesn't work with economies of scale. One company tried to just say, okay, instead of doing 25,000 liter tanks, we're going to do 250,000 liter tanks. The problem with that is nobody has proven that you can be as successful in 250,000 liter. If you need to put growing medium into 250,000 liter, that's going to cost you millions. If it doesn't work, you're losing millions. So it is, everything that works in the lab is great. But if you want to recreate food or meat, which is a 1 trillion market, it's going to be very, very difficult to do that from today to tomorrow. So I think what we really need to do is get the necessary tests, get the necessary investment, and stay focused on it.
So if I'm a tech company and I'm thinking in the correlation that maybe traditional, I don't know, let's say traditional banking or traditional companies that they've been, just doing this digital transformation with the use of technology. Do you see that happening in the traditional food environment where, these traditional food producers eventually will embrace more technology to enter better into the food tech, or they don't have a chance?
Fair question, right? This is always the key storytelling that you tell the CEO of a big dairy company right now that he needs to do it. I think it's a natural hedge. I think it's not about you have to, otherwise you're going to get obsolete. This change will not come within the next 2-3 years, right? The technology still has a certain amount of leeway to go, and until it gets there, you have time. But should you, as a CEO of a company, get involved right now? Absolutely. I think you're just hedging the risk. I mean, in the example of lactoferrin, what we did at TurtleTree, there wasn't enough lactoferrin on the market. So if you're a big lactoferrin player, for you, you're just hedging the risk. Okay, here's another guy. He can produce lactoferrin without the cows. As you know, milk production in Europe is actually declining. So if I have an increased demand of lactoferrin, I need to find sources of where I can get it from. Will it hit pricing point today? Maybe not. Will it hit it in 18 months? Maybe. So should I get involved? Absolutely. And I think it's the other way as well. If you're a startup in the space, it's not that the meat producers are your enemies. It's not that the dairy producers are your enemies. I think it's a hand in hand. You're going to work together with them to change it, right? I think this is also a little bit what in the early days, if, for example, Impossible or Beyond, they had a very strong support from the vegan community, which is great, but it's also a fine line because you have whatever 95% who are not vegan, right? So if you then become too much vegan and embracing it too much, you're kind of discrediting the consumer you actually need to make this $1 billion business. So I think it's really about a togetherness from the producers with the technology companies, because I do believe that the current big producers, they know that the change is coming, but they need the necessary support, and they need feasible technologies that are actually able to replace what's currently on the market. And the first wave hasn't really shown that they're here to stay, but I'm sure the second or the third wave will definitely grab market share of the traditional producers.
I love this. I love this conversation, Alex, because I would love us to do some serious brain gym, and I call it Foresight. So what I would love you to do is try to answer the next rapid fire questions with maybe the first thing that it comes to your mind, all right?
Yes, absolutely. Go ahead.
All right. So what is the biggest challenge for food tech that will defy by 2030?
Funding and regulatory.
I believe so. Yeah. Okay. So what is a food tech startup that we will be, or that we should be watching today that will do great in the next 5 years?
I don't want to, I think those food tech startups who actually have figured out that they don't need to create the whole value chain, right? For example, those who can create the scaffolding within the tanks, those who only focus on the media, those who are focusing on individual ingredients. So I think most probably B2B is the better play than the B2C play, right? If, for example, if you do fats, and I met the guys from Hoxton Farms, so based in the UK, they're doing fats, right? Fats is a little bit more expensive, but in the end, if you're just recreating the fats and you leave somebody else to do the B2C, I think it's a much better play, because you cannot do technology and brand and hope you get all the funding to fund your technology and your brand. So I think focusing on what we're really good at, that's most probably the successful startup.
I actually advise that to that many industries. It's also very important. All right, so well, let's go ahead there to think in a food innovation for, let's say, 2040, something that you don't believe that that you believe is needed, that we might not have it ready yet.
Cell-based technology for all kind of products. I mean, in the end, this is the beauty about it. Cell-based technology, you can take any kind of animal, you can take any kind of cell, and you can just multiply it and recreate it. So what we cannot do right now is three-dimensional steaks, right? Because you also need, it's three-dimensional. Ground beef, no problem at all, right? Because it's ground beef, you cook it. A simple meat, no problem at all. Burger patty, no problem. But a three-dimensional Kobe beef with the right fat and the right muscle and everything, that's going to be the future. And that's hopefully ready by 2040.
And what about, the talent on the food tech industry? What do you think what is the type of talent? What are the skills needed in the tech food industry in the next 5 to 10 years?
I think the talent is here. You have a lot of food scientists working for big corporates at this point in time. So I'm not worried about talent. But what's happening now is, as some of these companies are going to go out of business, the talent will shy away. And right, what you need to have great people who can help push this forward. It's always great to have these young guys fresh from university who say, yes, absolutely, let's change the world. You need that motivation. You need that vision. But actually people doing it are those who have worked in the big corporate companies and understand how the market ticks. You need great marketeers who are able to sell the product. And so I think from that point of view, the talent is here, but right now they're not willing to give up their big cushy corporate jobs if they don't see successful company. If you are taking a pay cut because you're getting an ESOP, but none of the food tech company has made a successful exit, your ESOP is not worth a lot. So your fear of changing your existing job and all the cushy pay package you have right now for a startup is relatively high. So I think what we need to do is we need to create winners in the space. And those winners will then attract new winners and new companies coming out of it. And the experienced people from the food companies will join them because they want to change the world and they want to move forward. But that only works if you have winners and people have seen a successful exit, right? And I think right now that's the difficulties.
So talking about winners, who is the one country that is leading food tech today?
I mean, look, one is simple to say. I think if you take it on a per capita basis, right, I think most probably Israel is the highest in regards to food tech. Also comes from the necessity to grow vegetables in the desert, farming, all these kind of things, right? Small company, not that friendly neighbors, so you're on your own. And so I think from that point of view, Israel on a per capita basis. But I guess the most innovation right now is still happening in the US, and the most support definitely happening in the US. Also, your market, right? Israel is 8 million people. Singapore is 4 million people. The US is 300 million people, right? So in the end, if you want to sell $1 billion worth of your product, you need to have a great market. I think Israel and Singapore are great test market. I think Singapore is amazing to test Southeast Asia. I mean, Starbucks, for example, before they moved into Europe, they went into Switzerland because you have a French part, you have an Italian part, you have a German part. You can understand the different consumer needs, your adaptability, and then you can branch out. Most probably Singapore can be used very similarly. Would you set up your industry in Singapore? Most probably not. It's too expensive, right? I mean, industry doesn't have enough, Singapore doesn't have enough land, and electricity is also pretty expensive, but using Singapore and the favorable environment as a regulatory environment, as a test market, absolutely. And I think this is also where the Middle East can come in, right? Where the Middle East can be very innovative and there's enough money to support it. And I think that's what's NEOM currently doing. So I think
so it's interesting because you say today is the US and Israel. And maybe if we think about maybe 5 or 10 years, Middle East is coming into the pack. The rest of,
if the Middle East has the patient, right? I mean, MBS has committed the capital and he says, we're going to build that, right? And I think it's also Singapore said the 30 by 30, we're going to do that. The key question is, if certain amount of headwinds come, are they still going to stick to the plan and give the money there because they have a 20 to 30 year vision? Or are they going to go and say, you know what, let's just focus on other things that generate returns? And that's the difficult ones. You need leaders, and Singapore had that, who think 30, 40, 50 years. And I think this is why the European Union has difficulties, right? Because they go with political cycles. They want to get reelected. But for this, you need visionaries and you need people who can drive this forward. And I think, yes, most probably the Middle East has the right political system. Singapore has the right political system. I would say US has the right venture capital system and a favorable regulatory system that's just going to make things easier. But I'm excited. I'm not pointing everything dark. I think we're going into a healthy consolidation and we're going into seeing winners in this space. But the transformation is not going to happen in the next 1 to 2 years. I think we need to put on a 3 to 5 years lens.
And it's going to go back into the one word responses today. So what about your, what is your go-to comfort food?
Go-to comfort food. I mean, who doesn't love pizza? I mean, I love pizza.
All right. What about the best business book you've read this year?
Oh, it's not a business book, but it's a Japanese book. It's The Courage to be Disliked. I like that one.
I like that one. It's very good. Very good.
Very good.
Okay.
Brilliant.
One word to describe the future of food.
Transformative.
Love this. And let's just wrap up this section. Let's going to do with the best advice you ever received.
Patience.
Ah, that's very good. I need that. I need a little bit of that.
Same here. Alex, same here. That's the best advice I got. I'm not saying I'm having it.
I know this. I would like you to probably share one piece of advice that you will then give to these young people that are passionate about food tech, that want to make the next amazing thing in this industry. What do they need to focus on to make a real impact in the future? What will be your advice?
I think absolutely find the right companies out there and learn even, and this is something most probably Europe hasn't really embraced and the US has embraced it much better. If you have the comfort to go to a company and work, and even if they're not successful, you take a lot of experience with you, that's great. In the US, generally, you want CEOs that have failed 2 to 3 times because you believe they understand what failure means. So right now, I'm not saying give up on food tech. I'm saying don't give up. Go in all the way, but be understanding that we're going to go through a consolidation and understand that in the end, the consumer decides. Technology is great, but if we're talking about food tech, we have the consumer who eats food on a regular basis. He will decide. So if you're young right now and you're thinking about what to do next, there is great companies out there who have raised very nice rounds. I mean, go on Crunchbase, check out who raised a certain amount of money. You understand they have deep pockets. They will stay afloat. Follow these companies, see if there's opportunities out there, and embrace it. And it's here to stay. We have to change the way we eat. We will never be able to feed 8 billion people. So it's not a fad that is going to go out. Same thing with clean tech. Everybody thought clean tech is done. And then we had things like Tesla come out of it, which is fantastic. And the same thing will happen to food tech.
I love this. Thank you. Thank you, Alex, for this insightful and thought-provoking conversation. Thank you for your wisdom.
Thank you for taking time. Thanks, Diana.
Well, my friends, it is clear that while the food tech industry is facing a series of challenges, there's a lot of potential that will transform the way that we produce and consume food. And so for everyone listening, we hope this discussion has been giving you a deeper understanding on what's at stake and what it will take for food tech startups to drive and survive. Stay tuned for more conversations at this intersection of tech and innovation right here at the Tech Foresight podcast. Until next time, keep pushing the boundaries and what is possible. Stay foresighted. See you.